Good morning, everybody. Welcome to the Investing Bros. It is Wednesday, March 29th, and do we have a great show lined up for you guys? Bill Noble is joining the show today to talk about what the future of Bitcoin could look like. Yes, last night we did have a nice little pump and rally, but it is going to pale in comparison to what we could be seeing later this year, and you definitely want to hear why that is. Do not go anywhere. Go ahead and smash that like button and subscribe to the channel for everything you need to know about investing in Bitcoin, in crypto, in stocks. You get your TA here, you get your news, everything you need. So make sure you are a part of this fast-growing, amazing community here, the Investing Bros. I am joined by amazing people this morning. I want to start off with the man sitting across the desk from me, and his name is T-Shroom. T-Shroom, how are you doing this morning?
Tim, I'm doing better than I deserve. I'm coming off of this nasty cough that I've had. You may hear one or two more coughs, but I am definitely on the upswing today, and that is really, really great. Well, I've got a fun quote here, and you'll maybe pick up on why I chose this quote, but we're going to hear from Ernest Hemingway this morning, and here is what Ernest had to say. There is nothing noble in being superior to your fellow man. True nobility lies in being superior to your former self. Thank you, Mr. Hemingway, for bringing us that quote of nobility.
I see what you did there with Noble. Well, Mr. Bill Noble, maybe.
Absolutely.
I'm also joined by Army Piper this morning. How are you doing this morning, Army Piper?
Brother, I'm doing fantastic. I'm watching the charts as always. I'm hanging out with my bros, and we got a great guest on today, so I can't complain, man. I'm doing fantastic.
Yeah, speaking of nobility, we are also joined by Mr. Bill Noble himself. I am so excited to have him on here. But first, how are you doing today, Bill?
I'm doing good. Thanks for having me. I'm on the mend as well, and we're back on live TV, getting ready to get into this crypto market.
Yeah. But before we get going, I want people to, in case anyone doesn't know who Bill is, we're going to have him kind of introduce himself here in just a couple of minutes, tell a little bit more about his story, because he has a lot of experience in this space, so you definitely want to pay attention to what he says. But Bill, I got a question for you, and it's the question that I asked our audience this morning. I'm curious what your answer is to this question. By the way, we only have 33 votes, so we need more votes in this. But Bill, would you rather stub your toe in every doorway or bite your tongue at every meal?
I would rather stub my toe in every doorway.
Goodness. Yeah. So you don't like food?
Well, I like food, but biting my lip does not, that doesn't end well if you keep biting your lip. It's bad.
It's true. It is very true. These are both sucky. The reason this question was asked this morning is because about 20 minutes before we went live, I ran to the other room, and just the two last toes, the pinky toe and the next to last toe, I don't know what we call it, the ring toe, I don't know. Just those two caught the doorway, and I'm telling you, the initial hit, very painful. But it comes in waves too. Like even right now, I feel like I can still feel the doorway with those last two toes.
Wow.
It is a very sucky thing to go through. T-Shroom, what would you say to that question?
I would much rather stub my toe.
Really?
Because biting your tongue every meal, you would eventually probably bite your tongue off and have to get it medically treated. Whereas your toe can take a hit. Start wearing boots.
The other thing is, because I did say every doorway versus every meal. How many meals do people eat? At best, 4 or 5, if people are like on that, like they eat 5 meals a day thing.
Yeah.
But like I only eat 2 meals a day. So I only have to bite my tongue twice a day. I walk through several doorways throughout the day. Piper, what about you? Which would you prefer?
Oh, I by far would rather stub my toe than bite my tongue. I talk way too much to have a sore tongue.
Oh, gosh. Well, it seems like the audience is leaning the same direction. Right now, we got 73% saying stub your toe in every doorway versus only 28% saying bite your tongue. But we got a long show, a lot of votes left to cast. We got 60 people watching right now, but only 38 likes. So we definitely need to get those likes up. And we're about to jump into some content here, but we do got to do our rituals this morning, starting off with reading names of people here in chat. And I do want to give a special shout out to Mr. Eric Wallen, the first commenter of the day. Congratulations. Who else do we got here this morning? Mr. J is here. Al Bundles is here. Joe Nickel saying he's fourth. So I'm missing somebody. So I think my poll covers the top 2 names. So whoever's second, I think it's Mr. J based off the very small picture I can see underneath that poll. But let's keep going on and see who else is here. Ninja Glock is here. Justin Eubanks is here as well. Alex Green. Hello all, he says. Thank you for that, Alex Green. Mike Play is here. CBD Suddy, Yair Navarro, John Kahn, Crux of Crypto with that blue wrench. Who else do we got? Cryptex is here this morning also with the blue wrench. And JN Carr, Philly Skills 1428 is here this morning. Steven E. Shrum.
Stephen E. Shrum.
Papa Shrum is here again. There he goes, one of those coughs. Gia S is here. Alton Henderson. Who else do we have? We got Josh Denham is here. Wind Peoples, Crypto JMP, Crypto Notic or Kryptonotic, which is it? I don't know which one is the correct pronunciation. Eric Brubaker is here. Elo Brown is here. Let's get a couple more here and then we'll transition. Kumar Raj, Crypto Trades, and let's get 2 more and then we'll call it on the names. Rave Song Records is the first, and Mike Lowry is our last name of the day.
Did you get Caleb?
Everybody. Who?
Caleb Franzen.
Well, Caleb Franzen needs to comment a little bit earlier if he's going to get us to say his name,
Caleb.
but he just got his name said, so shout out to Caleb Franzen.
Gotta shout him out. Gotta shout him out.
You guys know we love Caleb. Listen, if I did not say your name, it is not because I don't love you. It is because it is time to move on with our phenomenal content we got here. So go ahead, smash that like button again if you have not already. Before we jump in and we go over to the charts and we get the opinions from Bill, I want to throw it to Army Piper first. We've been talking about this, and I don't know if there's any new updates, but in case this is the first show you're watching this week, we always want to make sure we're looking at the next couple of days and weeks in the macroeconomic outlook. So Piper, what should we be expecting over the next couple of days?
All right, Tim, taking a look here. Today, Wednesday, March 29th, we have the MBA 30-year mortgage rate. It's currently coming in at 6.45%. So if you're wanting to buy a house, you can only, you can get one for the low price of 6.45% interest rate for 30 years. Not bad at all. And I'm being sarcastic, please.
He's being facetious there, ladies and gentlemen.
Yeah, I'm being very facetious. That's a horrible rate to pay. Fed bar testimony going on today. It's going on actually here in about an hour, so about 52 minutes from now. Then looking down here, we do have the pending home sales coming in. We'll see if that's going to be lessening of that shelter demand and see if that can get our rates back in line. And then Thursday, tomorrow, we got initial jobless claims going to be coming in at 8:30 Eastern Standard Time. So right towards the end of our show, we'll be seeing those initial jobless claims coming in. Actually, right before our show. I keep saying after. It's always before our show. And then Friday, the big day, we've got inflation rate year over year coming in for Europe. Yep. They've got the unemployment rate coming in for Europe. And you can see right now, it's looking like the inflation rate's going to be coming down for Europe, but it looks like their unemployment is not going to be changing much. So, lastly, though, we got personal spending month over month. And then the big one is going to be our core PCE that's coming out right before the show. It looks like right now, previously it was 0.6%. Consensus is 0.4%, and the forecast is going to be that it stays the same, coming in neutral. We will see what that comes in at when we go live. We'll be live with that info. So that is what we've got coming up on that. I don't see anything else that's big this week, so I think we're good there on what's going on.
Yeah, we'll go and check our very quick update this morning on what the next FOMC meeting looks like. Go to my screen here real quick, Piper. We've kind of found some support right here around the 50-ish level, 54 to 57 range for a 0-point interest rate hike. So right now, 57.9%. Let's go ahead and call it 58%, saying we're going to pause. 42.1 saying that here in about a month, we're going to see another 25 basis point rate hike. Again, super long way away, something to keep your eyes on. This can change very much so even within 24 hours. However, it is something that we are going to keep you guys posted on daily. Really quick, before we throw it over to Bill, you guys will notice here on Bitcoin, we just jumped back up after coming down low and people wondering, oh, was this a diamond pattern on Bitcoin? Are we about to dip back down? I told you guys, I saw this more as a trading channel, and sure enough, guess where we came back up this morning and hit our heads? Right there on that trading channel resistance. Currently trading about 28,463. So let's watch how we're going to do this threat today. Here on the hourly chart, you'll also notice that we turned this upper gold band that Chart Prime has for us on these predictive ranges back into support. So that's pretty bullish, but there's a lot that still has to happen before I think a breakout of serious nature in either direction is going to happen. With that said, though, you can go off my screen, Piper. I do want to throw it to Mr. Bill Noble because he is our special guest of the day on this Super Guest Wednesday. We have some great guests. We had Tom Crown yesterday, Bill Noble today. We have Crypto Archie coming on Friday, who is going to give us some great stuff on altcoins. But before we jump into too many details about Bitcoin, because I'm very excited for you guys to hear what Bill is looking at the rest of this year. First of all, for anyone who doesn't know you, Bill, can you tell us a little bit about yourself, what your experience is in trading, and why you might know a thing or two about what you talk about?
All right. Thank you. So I started in the market as an 18-year-old intern at JP Morgan in the summer of 1990. One of the traders went on vacation. He was the Swiss franc trader, and they said, let the kid sit in and do it. This is back when trading was done on the telephone. No windows, no texts.
There we go.
Iraq invaded Kuwait, and I saw price action I never saw before. Oil doubled overnight. It was the biggest move since the 87 crash. And when that happened, I said, oh my God, I need to pick up a chart book. I don't know how anybody manages this kind of volatility. So that started my career as a chart guy, and I kind of specialized in big problems and disasters. So I did 1998 long-term capital management blow up. I did Morgan Stanley at the dot-com crash. And I did 2008 at Goldman, where I was for 12 years. I managed to escape legacy in 2018, and I've been in crypto ever since. I like to use a combination of DeMark and William Gann analysis, and ChatGPT has allowed me to dive into the planetary movement astrology aspect of the Gann work. So I got my own channel, Crypto Noble, do the market update 4 or 5 days a week.
Nice. Wow. Yeah. No, you definitely, there's links in the description below and just in case for some reason I don't say this later, which I should, make sure you guys are following Bill, both on Twitter and his YouTube channel. Those links are down below. You, of course, see his Twitter handle right there beneath him as we speak. T-Shun, do you have a question or a thought?
Well, I was just going to say, Bill, I've also been trading while it's been a long time since I've seen or heard or read anybody mention the astronomy, using astronomy for trading. I saw it way back, probably like 2014 for trading indexes. I'm sure we'll get into a lot of things today, but I don't want to, if you would just mention a few things about that. What are some of the exciting things you're looking forward to? And it sounds like you also integrate ChatGPT. So I know we'll talk about a lot of things. I don't want that one to get swept under the rug. Inform us a little bit on that.
Sure. I can tell you about that. So Gann wrote a coded novel called A Tunnel Through the Air. Basically, it was his way of, putting everything he knew about numerology from the Bible and the Egyptians and everything he knew about astrology and astronomy and market cycles into this fictional novel that's terrible to read. So I have a cursory understanding of what he's talking about, but ChatGPT can help me interpret it, right? To get where I can, nail it down and say, okay, pretend you're an astrologer and you're giving a speech at the Federal Reserve about the future of capital markets in 2023, right? I got about 40 pages of stuff out of it. Okay. So when you hear guys do Elliott wave or you hear guys do cycle work, like Gann was big into cycles, like, what's the 10-year cycle, the 20-year cycle? I mean, some of it sounds crazy, but it's really just a way of looking at two things. You got to look at price and you got to look at time. Everybody on crypto Twitter has a chart. They're all looking at price. The edge is to look at price and time, and that's where the Gann work can come in as well as DeMark work and be, really handy. And this is, of course, if you can interpret it, which thanks to the AI, I now have kind of a handle on that.
Well, that's a very interesting point there. Using that, I know you have some things you want to show us here. What are you seeing for the future of Bitcoin? I know this was something that you and I got into over when we were on Debate Crypto here last week, and I knew when I was listening to you talk, I was like, we got to get him over on Investing Bros. What are you seeing for the future of Bitcoin? Not only, you can start with the more short term, maybe next couple of weeks, maybe next month or two, but even more long term. I know you have some interesting theories about what could be happening this fall for Bitcoin and stocks and other cryptos as well.
Okay, so yeah, I'm eventually going to be organizing all that paper I just showed you into videos, but awesome. I definitely want to do the extended preview with you guys. All right, so let's start with a fact. There are 2 solar eclipses this year. Okay. Normally, when you have 2 solar eclipses in a year, you can have a fall stock market event like crash. Okay. According to the preliminary research, which uses GAN and their research done from somebody else. Okay. The last time we had 2 solar eclipses in a year was like, 1929 and 1987 in the occurrence list, right? 1929 was characterized in particular by bank failures because banks were speculating in stocks, right? So it wasn't just a stock market crash. The banks owned the stock. So when the stock market went down, the banks vaporized. Sound familiar?
Mm-hmm.
Okay, so you got to be careful of the stock market crash. Now, there is what's called a hybrid solar eclipse in April. In my lifetime, there's only been 3 or 4. When you look at all the hybrid solar eclipses going back to 1800, there has been a financial crisis, a tightening event that created a problem, something with gold, a dollar devaluation, or a stock market event in just about all of those occurrences. Like I even have a hybrid solar eclipse, according to ChatGPT, going all the way back to the crucifixion of a prominent religious figure. So things happen when you have a hybrid solar eclipse. Okay, and we know this because it's happening in Silicon Valley Bank and long Bitcoin short the banks. Now, on that note, according to ChatGPT, the hybrid solar eclipse is awesome for Bitcoin. It's in April. So this bid that you see in Bitcoin probably is going to last until like, say, April 7th, because Michael Saylor is in. Okay, so in the short term, it's great for Bitcoin. Now, what does it look like for the rest of the year? Okay, I'm still guessing that there's going to be these like spurts, right? Like Bitcoin's going to move like a sprinter. Now it's moving from 28 and it might wind up topping out at, I don't know, maybe it goes up to 32 and gets everyone excited. Then it'll come off hard, right? Like in June. Okay, people may go, don't laugh, because this happened in 2008. There may be an everything is all right trade. Like for crypto people, we're like, oh, you got to get your money out of the system.
Right.
I've been talking to legacy people over the weekend, and everybody's financial advisor is like, oh, the Fed has all things in place. Everything is fine, like that meme. And in 2008, between Bear Stearns in March and Lehman in September, you had an extended everything is all right trade. So if you missed Bitcoin, just like in 2008, like when you know a trade's going to happen, it's impossible to be patient, which is when you should be patient. So there may be an everything is all right trade in June where maybe gold and Bitcoin come off. But of course, as we all know, when everybody says everything is all right, it's not. It's not. And then you have like a summer rally takeoff, like July, August. All right. And then after, which is typical because, stocks usually have like a sell in May and go away. And then they have a summer rally in July and August. I would imagine dumping Bitcoin like at the end of May and picking it back up in July, not investment advice, would make sense. Now, here's the big question. If there's a stock market event in September and October, how do you handle that for Bitcoin? Like, how do you trade crypto around that? So a couple points. One, you can't assume small cap or mid cap altcoins survive a massive liquidation event in the stock market, in the banking system, which I could talk about more. But if you have that type of risk off event, everything is probably going to go down. The question is what will come back. Okay. So yes, you can trade Bitcoin. And if you're okay with Bitcoin having a range from 32 to 17 or 14, all right, if you're okay with DCAing into that, great. Okay. You're going to get a chance to buy Bitcoin on that stock market crash. You're definitely going to get a chance to buy Ethereum. I'm pretty sure. And you're going to want to, because what's going to become apparent, I'm telling people this now, and you know this as a crypto guy, that you got to have at least 1/3 of your money outside the system. When I say that to normies now, they just stare at me. Okay. It's going to become very obvious in September and October that you probably got to get way more than 1/3 of your money out of the system. And then if you match that up with the GAN astrology stuff, I have a positive outlook for November. I have a positive outcome for Bitcoin for most of December. And then I also have good work for July and for January and February of next year. Now, how would that transpire? Well, let's do some math. There's $17 trillion in bank deposits in the U.S. system. The Fed can't guarantee all of that. They just can't. They can't print $17 trillion.
Right.
So if 1% of that money, or 2%, or 5% of that money goes into Bitcoin, keeping in mind that Fidelity has 40 million customers who can push the button and buy Bitcoin, and it can't transfer it out. They keep it in Fidelity. So if you keep that in mind and you look at pension funds, the global 256. So for example, if you said to somebody now that you could get a 10x in Bitcoin over the next year, they would probably say, the only person who wouldn't say you're out of your mind is Michael Saylor, who is buying Bitcoin right now with reckless abandon.
Right.
Right. So, you have to ask yourself in crypto, right? The idea of buying flash crashes in things like Bitcoin and Ethereum seems smart because Bitcoin will be the store of wealth, and people will pay for stuff with MetaMask on their phone with ETH. Seems to make sense, right? But the volatility in other altcoins could be dramatic because nobody's going to care about Web3 if the system is cratering, because of a variety of reasons. I could go into some of them. So, you want to be in a mindset where you got capital available, right? You got to be able to buy any type of flash events in Bitcoin or Ethereum. Okay. You got to not think that 26,000 Bitcoin or 28,000 Bitcoin is expensive, because it's not. I mean, I don't have the chart pulled up, but where's the 200-week moving average? Remember everybody last year like, oh my God, Bitcoin has never been below the 200-week exponential moving average. I think that moving average is at 27. You're basically buying Bitcoin at the average price of the last 5 years. That doesn't seem expensive to me, given what's going on in the capital markets that you can see, what's going on in the capital markets that you can't see, plus the GAN astronomy TA read for Bitcoin. And the only issue is how to manage the tactical trading around that. So that's the executive summary.
I appreciate it. I do. It's really interesting stuff. And again, I don't really know exactly how all of that works. It's been a long time since I looked into it, but it sounds like you've got a pretty good handle on it. And, so I obviously you've been profitable trading with these types of indicators and these types of tools, specifically GAN, but then also as it integrates in with ChatGPT.
Yes. And how I started doing the GAN, believe it or not, on my Twitter was GAN kept charts by hand. Right.
Goodness.
So I started out on my Twitter just some of the best stuff that I do, like when I really don't know which way the market's going to go, because I talk on TV like you guys, is I just get out the pencil and chart ETH by hand. So that's actually been the most profitable part of what I use with GAN, believe it or not.
Yeah.
Cool.
You know, so when we were on Debate Crypto here last week, and you can go to my screen or my face here, Piper, we were on Debate Crypto last week, and we discussed this. I know some levels you just put out, 32,000. By the way, that 200 SMA is sitting about 25,500 right now. The 200 weekly SMA. What do you think? What do you think the price levels that people should be watching? I know you put out there 20, it could go anywhere from 80 to 250,000 in the next bull market. But do you think, are you pretty set that 32 is about the high, or would it surprise you if we make it up towards 48, 50,000? What are your thoughts for people trading Bitcoin and even Ethereum on levels that we could see over the next little bit? Because one of the things you said that I love, and it kind of matches up with my timeline, our prices might be a little different, but you said there's a very common, sell in May and walk away, or sell in May and go away. And that's kind of what I'm looking at too, is I think sometime in May, we're going to have had a really nice rally for a couple of weeks, and people are going to be super bullish. And I think there's going to be a crash that happens that people are not ready for. What are your thoughts about the next couple of weeks into May for Bitcoin and Ethereum?
Okay. So as with 2008, right? The idea that you have to focus on is consensus trades, right? Right now, I think it's consensus that you need to be long Bitcoin, right? So even though that's consensus, people are not buying the dip. Like there's no dip. So people don't think they have to buy. They're kind of getting lulled to sleep.
Right.
So it's very possible, like I'm looking at my chart, it looks like the Celsius debacle started at 45. That's roughly 62% retracement of the way back of the whole down move. So you can't discount that there couldn't be like some sort of 10, 15, 20% God candle in Bitcoin. Like when it's in its positive period, like Bitcoin may be dormant and then it may go. So you could see, 36, 42. But then in May, or I think it's in June, you could get some sort of nasty retracement to where Bitcoin is right now. Right. So sometimes what happens is people say, I want to be patient. And then it'll lurch up and they say, I can't be patient. And then it'll come off and they'll go, I'm panicking. And they'll panic and sell right at the point where you're supposed to be buying. Because again, in June, you could have an everything is all right trade. You could have regulatory action. You could have a variety of wild cards, right? You could have hedge funds being forced to liquidate, which could put pressure on Bitcoin. You don't know, right? But, higher than expected short term with a deeper dip right before the dawn. So you could have right now, Bitcoin is not a volatile asset. I don't know. You could have 42, 25, 35, 18, 84. I know that's a lot to digest, but you could have a lot higher and then followed by a lot lower than anybody would expect after the up move.
But, I think some other things in the news that are kind of interesting to keep your eyes on, especially we're looking at this timeline, the May, the June that you're talking about. Remember, there's two big stories, everybody, that's coming out here very soon. First of all, we will have sometime in quarter two, which, by the way, quarter two starts here in just a couple of days in April. Later in quarter two, which would fit the bill of the back half of May and June, we're going to be allowing NASDAQ's going to be offering Bitcoin and Ethereum. And we've discussed this before. A lot of people, that is a very good story for right now. But news often when it comes to crypto and trading in general is buy the rumor, sell the release. Just because they now offer trading on Ethereum and Bitcoin does not mean everyone's going to come in and want to buy it, especially if we get a nice little pump up into that release. It might be a very juicy spot to short. The other thing is that we have the G7 convention happening in May. That is going to be more pressure on saying, hey, we need to try to find as much regulation clarity as possible with these 7 large economies to try to stifle crypto. And I love what he said earlier, what Bill said earlier, is he said, while we all know it's not okay, watch the stage get set for a everything is okay trade. We were watching, the White House, the Fed, everybody's using these phrases like banks are safe, banks are resilient, and it's not quite working. I don't think people are really trusting, but watch some things develop here over the next couple of months that allow them to legitimately make that, hey, everything is okay type of trade before what he's talking about. And most of us in the crypto realm know there's going to be some problems down the road when you spend money this irresponsibly, the way the U.S. government spends money, and when you print money irresponsibly, the way the Fed just printed more money to bail out banks. You are just kicking the can down the road of paying the actual consequence. And that's when Bill was talking about this over on Debate Crypto. I was like, man, we got to get him on here, because I was like, that's exactly, that would fit the timeline just perfectly of some things we have playing out here. And I want to throw it back to Bill now, kind of transitioning here. We're about to get into some more juicy stories, and I would love for you to stay with us and help us break those down. But I want to get your take on the Fed. I just mentioned them. What is your take on when you've watched Jerome Powell, when we've seen these remarks? Do you think that he's actually speaking with any type of genuine tone, or do you believe it's part of a larger scale? Hey, it sounds like you'd be in this camp, but are they trying to literally just kind of corral people into staying in the US dollar as long as possible because they know its days are numbered?
All right, great question. So everyone in equities is familiar with VIX, okay? And in bonds, it's called MOVE, the volatility index. The MOVE index has, gone way above 150. And if the MOVE index is above 150, it's right now at 155. The guy who made this index has put it very simply. The Fed has lost control. Okay. I used to work at Goldman. I used to speak at a conference. Our co-CEO, Gary Cohn, would speak. This big 6'5" guy. This guy would come up to the microphone and all would fall silent. Okay. Literally. And this guy went on CNBC like 2 weeks ago and said the Fed has lost control. So I know it, you know it, but it's been announced. Now, how is the Fed going to behave? Well, they're going to continue to raise interest rates because that's their way of pretending that everything is okay, even though that's backfiring everywhere. For example, used car prices are up again, right? Mm-hmm. Because nobody can afford to buy a new car because of interest rates, and the price of cars went up, but mostly because of the interest rates. Rent prices continue to go up because nobody can afford to buy a house. And food is next. Now, about the dollar. Powell may be hiking rates because he wants to be Paul Volcker and crush inflation. But I think Powell is also telling you two things that people aren't listening to. When he's hiking rates like this in the face of a banking crisis, he's telling you that eventually he wants the stock market down. And he wants a commercial real estate crash. Right. He just wants to take the air out of all of it. Now, right now, one share of, say, XYZ consolidated oil company is better than $1 in the bank. But eventually, Powell wants equities down, and he's going to get his wish in the fall. Now, about the dollar. There's too much talk about the demise of the dollar as the world's reserve currency. That's a geopolitical event. It's a Twitter obsession. And of course, if everyone's talking about it on Twitter, it's wrong. Okay, what people should be focused on about the dollar is that back in 85, 86, okay, the dollar fell 50%. The dollar index fell 50%. And everything was okay. Just that, there's a lesson here that Powell is trying to communicate to the market subtly, which is how the Fed normally communicates. And the message is simple. Boys and girls, if you have a debt crisis, which includes a government, the only way out of a debt crisis is to have a currency devaluation or a major currency drop. So Powell is basically telling you that, yeah, we're going to hike rates to try to hold up the dollar for as long as he can. But he knows in his heart of hearts, he's going to have to let the dollar drop a lot. And it's dropped a lot before. It doesn't mean a loaf of bread's going to $30, but wheat and oil are going to go higher. So Powell is like rearranging the deck chairs on the Titanic. He can continue to hike rates. He's going to continue to break things. And the only logical conclusion is that he wants to break things. The market will be careful what you wish for. and that eventually he just wants to let the dollar go down. Let the dollar reprice itself, because the net of the net is the Fed cannot bail out the system. You have to pull out your old-fashioned economics textbook and turn to page 60 where it says capital markets have to price assets based on reality. Right? Everything needs to get repriced. Bitcoin, the dollar, stocks, venture capital, real estate, housing. And Powell's read those books. So he's like, okay, I'm going to tighten and pretend like everything is okay. But really what I want is the stock market materially lower. You know, I want the rich to get poorer. I want a dramatic drop in the dollar, because that can have certain benefits to solve a debt crisis. And everybody is like focused on, oh, what's Powell saying at a press conference? Oh, please. That's all theater, right? It's theater. The focus on is for, this is Investing Bros. So for my Investing Bros, I sit around and go, okay, how are we going to make money if the dollar index goes from 103 to 60? That's what you should, everyone's like, oh my God, it's the end of the world. No, it's just a big macro trade, right? How do you benefit from a huge drop in the dollar? And how do you maintain that trade if there's an equity market event that's epic? So that's how I would look at the Fed. Powell's probably going to go down as a guy who's not that smart, but I think he knows that he's just got to let the dollar go. And if people in crypto knew that was in his heart of hearts, it would make them smile.
Now, and this might just be me. T-Shroom, if you had a different question, or Piper, if you have a different question, let me know. But when you say let the dollar go, but he also wants to crush the stock market, he wants to crush equities, are you saying he continues to raise rates and keep them high until we get a crash, and then a massive move into quantitative easing? Because every time he raises rates, he should be adding power and value to the dollar. What exactly are you explaining here? When you say he's going to let the dollar go, does that mean you're talking about quantitative easing or something else?
All right, good question. Don't have that exactly nailed down. Here's what I think he's trying to do.
Okay.
Right. When you have a debt crisis and raising interest rates, which has never been done before.
Right.
Right. You can have people flooding out of U.S. assets. Right. You can also, with the dollar in the foreign exchange market. I mean, last year people saw interest rates. So, the dollar can move for different reasons. And Powell can't stop inflation unless he stops stocks. And he can't bail out the system. So he's going to have to let the dollar go down. Now, will Powell have to print money? Yeah. It's already happening. I mean, it's happening. Now, is he going to be able to print 17 trillion? I don't know. I mean, if he tries to, that pretty much seals the fate for the dollar. Now, rather than war game what the Fed's going to do, I just go back to Ray Dalio's talking about this and has been for a while. You go back to old guy, dust off your economics textbook. The only way out of a debt crisis is a currency devaluation. The most extreme example was Argentina. Like I said, I don't see a problem. The dollar index in 85 went from 150 to 84. I don't see a reason why the dollar index can't go from 103 to 60.
Wow.
as a way to relieve pressure on the system based on an economics textbook. And, Powell's just going to have to let everything get repriced. He's not going to get on TV and say that. I'm going to get on TV and say that because I don't want my listeners or your listeners to get hosed. Right. But he can't step up to the microphone and say, you know what? Y'all have made a big mess here and I can't clean it all up for you. Can you imagine?
Right? Yeah, I mean that's what we've been saying is that it's just absolutely it's crazy when people look at this and they try to blame inflation on all these different things, all these problems, government spending. No matter what Jerome Powell does, he cannot make up for everything that our government does in spending. I want to ask you last thing on this topic, and then I'm going to throw to T-Shroom to cover a couple more current stories. However, with the recent events we've had happen with Russia and China, and then of course we know now that Russia is going to be trading with countries in Africa and Asia and even Latin America using the Chinese yuan. What is your take on that? Is that more noise and smoke and mirrors, or do you see that as a massive piece of information going against the U.S. dollar? And how do you see that kind of playing out? Does that factor into Jerome Powell's decision making? Does that factor into anything else to try to salvage the U.S. dollar as the world reserve? What are your thoughts about that issue?
Okay, the end of the dollar as the reserve currency and people, kind of diversifying themselves and being able to trade in other currencies, frankly, is logical because we've weaponized access to the dollar SWIFT system. So if enough people get cut off from that, they go, well, we're going to have to find another alternative. Now, is the Chinese currency going to be the world's reserve currency? Yeah, okay, that sounds really good on zero hedge, but, like Apple is eliminating all their China exposure. Like Apple is moving all their production out of China. So
Gotcha.
I don't know where everyone got this idea that everything's great in China. It's not. All right. It's not. So everyone, again, this is like, Twitter, blogosphere. Everyone's like, oh, wow, look at these negative dollar headlines. The dollar is doomed. I don't see it that way. Right. I see that as noise. I think the dollar, if people start paying for commodities in different currencies, okay, that's nice. But we're chart guys, right? So, if the only answer to a debt crisis is a currency drop, then the currency just has to drop, right? And you have to profit off that. Like how Russia pays for, whether Russia wants to pay in rubles or whatever. I mean, it's not going to change the fact that a lot of times when people get worried, they want the dollar. You know what I'm saying? Like, unless we're about to have a world-ending event, which I don't think we are. I think we're having it's going to feel like it.
Yeah.
But the dollar just has to go down to relieve the pressure in the system. So, what our enemies want to do, there are enemies. They're going to throw punches. Are they going to land? But it's like a UFC thing. Are they going to land them? Are they going to get a knockout? I don't know. I don't think so. I think you should be more focused on the economics aspects of the dollar as it relates to what's going on with like hidden leverage in our system and the banking crisis.
That's really good. This has been such a good interview. I know we ran past even the time I was going to ask these questions, but I know I said one more before, but this is my last question for you, Bill, on this issue, and then we'll get into some more current events. When we're talking about the dollar going down, potentially all the way down to 60, which would be absolutely crazy. But what are the coins that you are looking at? Or what are the projects you're looking at? I mean, are you looking at gold? Is it just Bitcoin and Ethereum for you that you're looking to kind of go against and hedge against the US dollar? Are there other altcoins that are on your your mind of what you're saying? Hey, this would be a good store of value. And of course, this is not financial advice, but I just want to hear what you're thinking.
Okay. So yes, again, this is not financial advice. So I work actually, I do YouTube, but I have a day job with a group called Emerging Asset Group. So we've got two tokens. One of them's connected to water. One of them's connected to gold. So, in altcoins, I believe you have to focus on functionality. Like the last cycles have been characterized by liquidity-based pumps. Okay, the next cycle is going to be delivered by practicality. So these are the themes I'm looking at. I was looking at commodities on the blockchain. That's my group. I was looking at privacy. Like Monero is sitting on its 200-week moving average, I believe. The Zcash chart looks terrible, but I'm kind of hoping one day it'll turn around. From back in the day, I remember Ravencoin. 2017, the analyst I worked with wrote up a report, called it the tokenization of everything. BlackRock has told you, by talking about tokenizing assets, including stocks, they've told you there's no liquidity in legacy. None. Commercial real estate, venture capital, stocks, corporate bond, none. If they don't tokenize those assets, they can't get liquidity. So can Ravencoin solve that problem? I know a lot of ETH miners moved over there. I don't know. But privacy, the tokenization of everything, and like real world use cases for blockchain, particularly as it relates to like physical assets. Then I also think, there's the case for ETH. Okay. All this SEC noise about regulation, forget it, right? The SEC thinks it's a security. The CFTC says it's a commodity. It's neither. It's a currency and a tech platform. Okay. And the SEC wants the courts to try to do their job, and the courts are going to be like, get away from it. Congress will eventually have to pass something, and that's a long way off if it ever happens. So yes, ETH can get smacked along with other altcoins, but remember, well, you don't know this, but I actually did a study with an economist I worked at a prior job that dollar down and commodities like wheat and gold up, grains and gold up, correlate fantastically with ETH upside. So ETH does very well when you have dollar lower, grains up, and metals up, all of which non-investment advice are going to happen. So everyone's like, oh, well, I can't buy anything Ethereum because regulation. They're going to miss the trade. There may be a big down move. Bitcoin may outperform, but ETH will rise from the ashes as the dollar falls. Now, is there anything outside of those products? I don't know, man. I know everybody on YouTube does this. This year I finally started talking about XRP. I've been on YouTube for 3 years. I haven't said anything about XRP or Cardano, really.
Right.
Until this year. XRP gives you speed. And it could wind up something transactional in the event that you have like a payment market sort of problem. So, I mean, that's one thing. And then I think the only thing I would add as an appendix is, when it comes to NASDAQ getting into crypto, you got to be careful that whatever it is they create doesn't allow legacy players to actually short Bitcoin and pressure it down. Because if you look at the start of Bitcoin futures in 2018, the start of the Bitcoin ETF and the Coinbase IPO, all three of those cases, the market went straight down after those things came out. Like the top was that day. Okay. So, I'm looking at real world use cases for crypto. Privacy matters. Tokenization matters. I think there's Polymath or Polymesh it's called now. These guys have been around for a long time. They've been around since 2017. So, 2021's winners won't necessarily be 2024's winners.
Those are really good. I appreciate you you bringing those to our attention. Jumping in, kind of on that note, in your bio it said that you had worked or had experience at the Chicago Board Options Exchange, the CBOE. Is that correct?
CBOT it should be. Chicago Board of Trade. Yeah, that was when I worked in the bond room. Which,
okay. All right. Never mind. Because I was going to ask you a question about the gold market manipulation, which is similar to what you just described. How bigger banks or bigger financial institutions get in to short, and they go short and they suppress the price of gold. Do you have an opinion on that? I wasn't able to find much evidence to that.
I absolutely do. Do.
Yeah. Shoot.
So there's more chat GPT stuff in the other stack of papers. Okay, so at Emerging Asset Group, we have a token, right, that's connected to gold. So we're up on what goes on in the gold market. And here's what I figured out with ChatGPT. So here's what you know. You know that there's the paper gold market, which is futures and ETFs. Institutions sit on top of that and short those instruments to keep the price of metals from going up, because everybody is short metals. And what does that mean? Well, that means every gold bar out there has got 10 owners. If everybody in the paper market said, I want to take physical delivery of gold, the gold's not there. You go on texmetals.com. I live in Texas. You'll notice that the price of silver is 23. And if you want to buy a 1 ounce silver coin, you're going to pay 30. There's not enough physical metals if everybody decided to take delivery. Now, that story has been around forever. Here's what I pulled out of ChatGPT. I said, okay, if everyone goes to take physical delivery of gold and it's not there, where's the risk? And ChatGPT, if I recall, said the risk would be in the COMEX's clearing banks.
That's right.
And guess who the COMEX clearing banks are? Oh, they would happen to be the banks where everybody thinks they're safe. That would be JP Morgan, the big banks in Europe, et cetera, et cetera. Okay? So this is just like 2008 in The Big Short. Everyone's like, oh, yeah, they made a movie about The Big Short. I knew all that. It was obvious. No, it wasn't obvious. I mean, we knew something was going to happen, but the way that unfolded, that was shocking. Even though we knew inside Goldman that something was horribly wrong, we didn't know how it was going to play out. And in this case, the fall black swan could be like a hurricane in Houston that hurts gasoline refineries combined with some sort of delivery problem in gold, I guess I would call it the hidden leverage in the system.
Gotcha.
There's leverage in the system, but there's hidden leverage. The problem isn't with Silicon Valley Bank. The problem is with you can't see. And this gold problem and how it could unfold, right? Because, everyone's got to get their money out of the system, guys. And everybody's not going to do crypto. So gold matters now.
Right.
So
right. Absolutely.
That's how I would describe that problem.
Yeah. I was hired to do some research on this subject last year. And there's a lot of people like yourself who have stories to tell about this, but there's not a lot of what I would consider scholarly articles or any kind of evidence to back this stuff up. But I hear it again and again from people who know what they're talking about. So anyway, this isn't a gold channel. Gold is becoming very, very important these days. As macroeconomic trends kind of move in the direction of people taking stock and researching and looking into gold. But I want to go ahead and get into I've really narrowed it down to just two stories for you guys today. Yeah. There's not a ton in the news, but there is two things. So if you'll go to my screen here, Piper. The first is that Credit Suisse whistleblowers say Swiss Bank has been helping wealthy Americans dodge U.S. taxes for years. I don't know if this is going to be a surprise to most people, but now it's official. It's out there, and global regulators will have to do something about it. The bank notoriously pled guilty in 2014 to criminal charges for knowingly and willingly helping U.S. clients hide offshore accounts and income from the IRS. The now troubled bank appears to have violated that agreement, according to new report by the Senate Finance Committee that details ongoing and rampant abuse since then. The report released Wednesday details the findings of the panel's 2-year investigation and takes on more urgency given the banking crisis. So I'm not sure what implications, second or third order implications that will come of this finding, but certainly, probably not a good time to be on the board over there at Credit Suisse. All right. I don't know that we'll have a lot to say about that from a discussion standpoint. Stop me if I'm wrong, but we're going to go ahead and get into this other article here. Sam Bankman-Fried bribed Chinese officials to unfreeze Alameda funds, prosecutors allege. Okay, so let's go ahead and get into some of these details. Again, going pretty quickly here, guys, because we want to get back to the discussion as much as we can. According to a renewed indictment, SBF took several measures to release the funds, including appointing attorneys to help unfreeze the accounts. He also used the name of persons unrelated to FTX to bypass restrictions by Chinese officials. After these methods didn't work, SBF allegedly instructed one of Alameda's employees to send bribe payment instructions to other employees. Court findings revealed a bribe payment to be at least $40 million. And then there's a pretty funny part here. Additionally, SBF's parents, Joseph and Barbara, signed an affidavit to prevent Bankman from accessing other devices in their home. They also swore not to bring other devices into the house. If there is reason to believe that Bankman violated the new arrangements, he must submit the new laptop and phone for examination. So, SBF can't find an alternative to that is pretty laughable. But yeah, all right. So those are your breaking news stories, guys. Neither of which are really market movers. Might be market movers in the European markets with the Credit Suisse headline, but I would say probably not. So, but those are important news to bring to your attention.
I think the one that I want to I would like to get look at that Inception. I love it. The Inception of T-Shroom's screen. You can go to me now, Piper. The story that we covered yesterday, and this continues to kind of unpack and what this means for everybody else. But the Binance lawsuit now at this point with CFTC. It is
lately.
very much looking like, and correct me if I'm wrong, any of you guys, correct me if I'm wrong. It's looking like what they're going after is the fact that not only did CZ and Binance create several different accounts to trade, and the newest reports are pretty much saying they're going to try to ban CZ and Binance officials from trading. But the other thing is that they allowed access and encouraged Americans to use VPNs to go trade leverage on their account. And it kind of is a thing that it opens up to a question of what does this mean? First of all, do we think they're going to win? Do we think they're actually going to get to a place where Binance starts enforcing KYC so Americans can no longer trade using VPNs? Then you start looking at some other trading platforms like Bybit, like BitGet. There's a lot of people, even in this community, this Investing Bros community, that do just that. I want to start off with you, Bill. What are your thoughts about this? Do you think that that's where this is going? Are you concerned about this? Do you trade leverage using VPN? What are your thoughts about this case?
Okay, so I do not trade leverage using VPN. Okay. I don't do it. I think, believe it or not, the CFTC actually has a point here, right? Like they regulate futures. These guys are allowing leveraged futures trading, right? So, if they're allowing Americans to do it, I mean, it's not 2017 anymore. You should know where your customers are coming from, for goodness sakes. Now, unfortunately, this is another stunt to try to take down CZ because Binance is obviously a pillar of the crypto, ecosystem. So, yes, it's not good because the CFTC has much more of a point here than any of the SEC's nonsense. But it also feels like a smack of politics of trying to take out CZ when really all he has to do is pivot and say, we're kicking off all Americans or we're doing KYC or whatever. I think it's something that can be navigated by Binance so that it doesn't turn out to be ugly for the crypto space.
Interesting. What about you, Piper? I know this is a big thing for you. What are your thoughts about where we're kind of moving with this? You're still muted.
Yeah, it takes a second for this screen to load. I got a lot going on here on my eCam. Yeah. I think, man, I do a lot of leverage trading, and I want regulation. I want smart regulation to exist. But I give me a little heads up so that I can, get all of my money off of the account that I trade on is what I would want. So, I mean, at the end of the day, if the regulation comes out, everybody says we need to know how often, or how, what are our left and right parameters, and how often can we expect updates to this? Everyone wants that, right? That's what's going to bring the big money in. That's what's institutional money, the retirement funds Crypto Nober was talking about. That's what it's going to be required. But we have to have, some type of heads up because you've got a lot of people that have been operating what's been okay up to this point that need to know that it's not going to be okay tomorrow so that we can make those moves. So, however it goes, it is what it is. Money can be made in 1,000 other ways in this space, but give us a heads up on it. So,
yeah, I think as we kind of close that out, we're going to be closing the show here in just a second. I think it's not time to just panic and freak out. If you guys do trade via leverage using a VPN, using a different exchange, because again, at this point, is there any American exchange? That's a question for another day. Is there any American exchange that even lets you do leverage at this point? But there's still a lot of things that have to happen. First of all, this is just a lawsuit at this point. We don't even have a decision yet between the CFTC and Binance. So continue to wait on that, and then we'll see how that trickles to other accounts as well. I do want to give a special thank you to Bill for joining us this morning and giving us just absolutely phenomenal content. This was very, very helpful. I watched the chat just amazed and think this was extremely helpful. Are there any words you'd like to give to our audience before we let you go here, Bill?
Yes. Every big mistake starts with denial. Don't be in denial about what's happening. Don't. Okay. There's a new definition of diversification. It used to be stocks, bonds, whatever. Diversification now applies to your cash holdings, dollars, Swiss francs, cash, euros, Bitcoin, Ethereum, commodity futures, right? Expand your mind, expand your definition of money.
That's a great point. We've been saying that now for a couple of days. Do not hold any more money in your cash than you can afford to lose, just like crypto. Diversification is going to be the name of the game here moving forward. Make sure you guys go and follow Bill Noble on both his Twitter and his YouTube account. Those links are in the description down below. As we close today, I also want to make sure I'm trying to do better about this with the announcements. I will be on Around the Blockchain tonight, so make sure everybody from the Investing Bros community, you guys go and show support tonight. It's going to be great, going to be awesome. I cannot wait for that. With that said, though, we will see all of you guys tomorrow morning, same time, same place, 9 a.m. Eastern Standard Time. You guys have a great day.